What is up, everybody? It's Adrian CryptoBirb speaking, your favorite bearded bald host for this Friday's webinar. I'm actually really surprised that we've learned nothing new, and I really mean nothing. And by that, I mean Jackson's Hole for Wyoming, and the central bank is meeting, and where Chair Jerome Powell actually said nothing new. This is actually a little bit more surprising to me because, well, we've already got to know that before, right? We got to know that during the last FOMC meeting that we are basically in a recession, that there is a huge slowdown. But in all honesty, will the rates keep going up forever? What and how will Bitcoin react? What will the future bring in the next couple of days and weeks? If you're ready to hear about this and more, make sure you stay tuned. We are going there right in a second. What is up, everybody? How you guys are doing? Please let me know in the comment section how you're feeling today. Beautiful day, beautiful love weather always in Portugal. Love this so much. Love this new spot so much. Beautiful sitting scenario also in Ericeira within the surfing village. I really love this place. Other than this, guys, this has been quite an intense week for me personally. Lots of stuff, managed on the back end as we grow the Birb nest. This is like a brand new level right now, but lots of achievements also have been unlocked. And I just want to make sure that you guys are well addressed in the very first second. So I hope you really are doing okay. Where you are, drop me kindly some notes from where you're writing. I'm really curious about that. Shemanko, good morning. Let's start Suraj Bhatia, if I'm not mistaken for pronunciation. Sorry about that. Next, what's up, Adrian? Hi from Mr. Canada. Rainy day here. I hope you guys are coping well enough with with so much rain. I know there's lots of rain in some terrains within Canada. Good evening from South Africa. Cool, Rajesh. I love it. Mateo says, I'm balls deep in it for long and I'm starting to have concerns. Cool, we can cover that a little bit later today. So just keep your comments coming. Hello from Croatia. Back to Croatia with all the love. Jason, Rajesh, yeah, really good, really good. Super happy to have you guys. Let me just kick it off right straight away because there is quite a lot of to be discussed. First of all, huge news. I'm really excited about that. I am proud to announce and to officially confirm that I have been granted my CMT designation, which means that I am a certified and accredited technical analyst, and I am the only CMT, the only chartered market technician from Poland. This is actually quite an achievement. I'm really proud of it. This took many years of my years of studying, of preparations, countless books, and infinite amount of knowledge that is yet to be consumed, hopefully, by myself. And this very charter is basically to guarantee a form of equality in terms of like any knowledge that you get. Well, from my side about technical analysis. Of course, we are all human. We're not going to get you guys some infinite projections or price targets for the next 5 years and what the price of Bitcoin is going to be. Nobody has the crystal ball. I don't have it either. However, this very charter definitely makes me happy because this validates for myself as well that I know that what I'm sharing with you guys is of full quality. So I'm happy to announce that. And also, and just in case you didn't notice, I launched this experiment on Twitter where I would host Twitter Spaces, and this is the second Twitter Spaces I would have recently, and I do really hope you guys tuned in for it. If you didn't, make sure you scroll through my Twitter tweets, and you're going to have the Spaces. I host them on Thursdays, 6 p.m. UTC. 6 p.m. UTC on Thursdays. It is an hourly talk with guests. Yesterday we were discussing about, is crypto going down again for Fed, Jackson Hole, Powell rates. Tons of very good exclusive insights that you get only in Spaces. So I highly recommend, guys, you tune in for the next 4 days as well, because I'm going to host this weekly. And hopefully everything is clear, and so far you can follow. Quick mention about the very well, with the trading competition, we are giving the chance to take part within our collaboration with BitGet Exchange. And we, as you know, we've been hosting so far this trading competition for quite some time. Okay, this is quite a chance for some of you to win the prize pool of $10,000. There are of course certain rules you have to meet. Probably just go and look into the video description where we're going to attach the special link to sign up, which is going to get you basically up to $8,000 bonus and 15% off on trading fees, which makes a lot of sense. Trading fees are hella expensive. And at the same time, probably there is a deposit that you need to meet in order to qualify fully for the price. However, you guys may enjoy this. So feel free to go and check in the video description. We're going to attach for you this full details for this competition on BitGet. That's where we are trading right now. For the Wall Street Journal, which basically gives you a bit of a rundown of what's been happening for, well, very fresh speech and reactions on the market. As you've seen, markets declined shortly after Powell basically stopped speaking, right? We learned nothing new. And this really makes me surprised and just really is staggering to me for how many times you get, you get to hear, funny thing, politicians and people in TV speak, and at the same time you learn nothing new. Right? This is completely waste of time. What it says on the Wall Street Journal basically says, I quote, Jackson Hole, Wyoming, the Federal Reserve must continue raising interest rates, and hold them at a higher level until it is confident inflation is under control, which implies it is not under control just yet. That's what Chairman Jeremy Powell said in the widely anticipated speech Friday. These anticipations often just run the prices upwards to be later trapped and sell from the news traders. While the central bank's steps to slow the rate of investment spending and hiring will bring down inflation, they will also bring some pain to households and businesses. We know about consumer spending that it's been at historical lows, that the consumer sentiment has been very, very low as well. Consumer spending, I referring there, it's not about being, at historical lows. It's about being relatively low versus to what people actually have, of course. With a lot of helicopter money that people got after COVID, it seems that they had been not really much willing to spend those money, right? And at the same time, most of the people are not really left with much choice other than holding this cash per their own wish. But then if they hold this cash, they agree to lose anywhere between 10 and 15%, or even more yearly. This is quite an achievement to actually ruin this inflation so much and to let it slip out of control so much. This is really years of work, and so congratulations to all the politicians there. Of course, recessions that we are in right now, recession, is something cyclical. It happens every now and then. We got lots of alerts earlier this year. We got inverted yield curve, back in February, if I remember correctly. I was talking about it already at that time. And recession means that the economy just slows down, it shrinks. This is the very opposite of growth, right? So it does mean that, technically, whenever there is an economic cycle, business cycle, the economy takes 2 steps forward and 1 step backwards. And this is the very step backwards that we are taking right now. So I'm not really surprised to see that they are admitting that the inflation is not under control, because this is definitely the main, I should say, one of their main mandates, next to job creation, next to job market, to hold or to keep the control over the price stability. That's what Jeremy Powell actually, definitely speaks about a lot. And chairman as well, among other words, there were the quotes for, those are the unfortunate costs of reducing inflation. Those are the annual symposium in Wyoming. That's what's been said as well, among other speeches. But a failure to restore price stability would mean far greater pain. That is what I personally agree. Right? They are very aware how bad the things had become already. And in all honesty, of course, it's going to take time, patience, and the inflation seems, a little bit tapered, right? Of course, there is a little bit of a tamed, first positive signs for the bullish markets, for the risk on markets, where given basically over the FOMC, of course, and despite 75 basis points and 250 points, to 50% interest rate right now, you're looking at somewhat of, I should say, rejection of the stocks, but after a bear market rally, right? So that's all implied that we are still in the bear market. However, the rallies somehow on the way down are low. And the question is whether those rallies are going to continue any higher or lower. And that is what I'm going to try to break it down to you guys. And you can tell that, well, like I said, we have got this main June reversal, sharp V-shaped recovery, and then literally breaking off for the Dow Jones Industrials, towards this 200-day average, which got rejected. Same for composite index, that Nasdaq Composites, which otherwise actually did not manage to get as high as Dow Jones Industrials. And the large caps, the S&P 500 got another series of a heavy rejection through the 20-day support, which is this very green curve, and arguably, perfect rejection, of course, on top of the 200-day average. At the same time, was something that I had personally, again, a little bit anticipated. Definitely it was not certain. Nothing is certain when anybody tells you they were certain about the markets, and that, yeah, this pattern was so obvious. It broke down just like I was expecting. I was 100% positive. So first of all, did you bet all your money with it? And secondly, there was this thread that I had to recommend to you guys to read it. I've started doing those threads on Twitter, so feel free to follow them as well. And the question that the hypothesis I actually just wanted to introduce a little bit was that, is the stock and crypto bear market really over? Of course, I don't have a crystal ball, but the main conclusion was, there we go. All right. That, well, the yields were increasing, that there was a heavy rejection of 200-day mean, that if I were to guess, I'd say the bear market rally is over. It does seem to be this very case. However, like I said, nothing is said, and we don't know what's going to come up tomorrow. So, it's good. Perhaps, it was a good guess, but nothing more. And if I were to share, some of my thoughts further down the road, I do think that breaking down the 20-day support, which was poorly attempting to build a base somewhere within, by the large cap stocks, by the S&P 500, I would argue that this actually brings a little bit of more bearish insight, right, to the market, potentially leading more towards retesting the 50-day average. And if this does test the 50-day average, I would argue that this is a whole half of a move, about 50% of the entire move recovery kind of like being retested out here, right? So this is a deep retest. This is not a full-blown bull market where these corrections typically would end in the higher phase of the fully newly developed trend. So I would argue that these deeper retracement rather tells you that the markets are not definitely out of the woods just yet. Instead, deeper retracement may give a little bit of more hope for a potential bottom formation somewhere over here, right? However, it's not going to be anything certain. I would definitely argue that you guys should remain cautious about that. We don't know what the future brings. We are in the recession. We are in a highly uncertain territory right now. There is definitely geopolitical tensions and risks. There is winter coming up, right? So there is heating, high energy prices, all that, is basically what you're experiencing right now. The energy had had this nice breakout, did manage to break up upwards towards this breakaway gap that we had, this breakaway window on the start of the very beginning phase of the sell-off that kicked off in June. And the energy getting more expensive means less disposable income for traders, for investors, right? Because they have to pay this hidden tax. They have to pay those higher prices and higher expenditures on their energy, basically, right? So if I were to guess, this rather drains the liquidity out of the markets rather than brings them new money in the markets, right? The markets can rally if there is enough demand. If the money are actually being extracted, and I should say evaporating out of the markets, then this rather puts there a lot of question marks in terms of whether or not there is a substantial rally to come. So my guess is, well, if we are to continue to grow the energy prices at this rate, and there is this recessive environment, which is quite typical to be concerned around high energy prices more often than not. Typically, whenever there are high energy prices boosts, just like we had in here until 2020, from 2022 until May, June, then typically it is followed by recession. This is high energy prices are followed by recession more often than not. And then, of course, like I said, you would look at quite a deterioration on the USB on the 30-year bond prices here. A heavy decline breaking through the main support area defined by the moving averages, the 20-day trend and the 50-day trend. It shows little respect. The prices of the bonds show little respect. And inversely, the prices of yields on a 10-year basis, just for instance, for TNX, you're looking at this decent breakout, right? Decent breakout. I'm saying decent because, well, we were trapped in this or encapsulated somehow in this head and shoulders pattern. However, this head and shoulders pattern, did manage to record this breakdown. However, this breakdown did not get validated, did not get confirmed. Typically, when you get a breakdown, you need to have a full sequence of a breakout and retest, which follows through lower, right? Unless you get to see this breakout retest and you only kind of like move within this first phase, when many people would short the breakdown, right? They would not really wait for the confirmation. Then those traders were trapped. And now we're looking at this comeback of a rally, in the yields, as we know that there is, of course, this fundamental increase also aligned with 200-day average trend, basically for the yields. So we know that we are in the rate hiking cycle. We know there is recession. However, eventually, I would argue that after some next couple of times that the rate hikes are going to be implemented, perhaps a little bit more soft versions, a little bit more dovish, as we go less aggressive rate hikes. Again, we would start slowly, probably moving away and moving back towards more quantitative easing. Until we get that, we're looking at a very strong dollar, right, which is recording its breakout over seven-year trend, 7-year resistance of 104 points for the dollar DXY, the DXY index. And of course, strong trend defined by none other but 50 a month average, right? This is the very curve, and this also curves up and breaks above this previous highs, which tells me that on average we are looking at a bull market for dollar, right? So bull market for dollar typically means, again, less money for investment markets, for financial markets, right? For risk assets, which typically aligns with bearish environment. That's what I would guess if I were to guess. And then we are looking at the yearly performance, where year to date, the stock sectors are basically run and driven by the energy. The energy is the main and sole outperformer, and quite heavily. We are talking about 55% of a retracement, 55% of returns, throughout the year so far, year to date, while the other clump of other ETFs, risk assets, risk basket, is basically down there between underperforming heavily, and underwater 30%, anywhere between 5 and 30%. Besides, we're looking at staples and utilities, which are also driving away the demand, I should say, from the risk assets, as the utilities, the staples are definitely more defensive stocks, and you can tell they are above the break-even level for the year as two standalone riders right beneath the energy. So I would argue that this is not really a bullish outlook for the short term, at least. And then by having a look at the 5 last trading days for the RRG, which is related rotation graph, then you're looking at a quite strong comeback and a pullback into the leading quadrant again for the XLE. This is the very XLE kind of like tail. And on the far opposite end, you're looking at the Bitcoin USD, which is showing strong lagger kind of like situation out there. Bitcoin has been lagging strongly against the S&P 500 and even more strongly against the energy, right? It's on a far opposite. While energy was gaining, Bitcoin has been losing so far, right? There is improving conditions for dollar for the past 5 days as well, and utilities, consumer staples, healthcare, overall those, utilities in the leading quadrant. This is a more protectory environment, if so such a word. People tend to protect right now over the past 5 days, protect their money rather than spend them, rather than invest them. This is what you can tell that, this risk kind of like off environment is given and granted. And by that, I also mean this kind of like, breakout we are truly looking at right now on Bitcoin, right? The correlation to S&P 500 has decreased from about 0.9, the historical highs that we had stayed over for about like 5-6 months, if I'm not mistaken. So that's quite a lot. And then we're looking at a little bit of a deterioration of the correlation coefficient of a 7-week basis. So 0.53 tells you it's a way weaker correlation between the stock market prices for Bitcoin. However, it's still positive and it's still quite strong. It's still frankly strong. So you're looking still at a positive correlation between the market directions. So stocks drop, Bitcoin is more likely to drop. However, it used to be more likely to drop whenever stocks would have dropped, a couple of weeks ago. So right now, if we have a look at a short-term chart, right, discussing this very trap, I referred to the spaces because yesterday I was talking about the very attempt to avoid getting trapped, and this very trapped situation came in with today's speech from Chair Jerome Powell. So if I were to give you guys any hints, well, more often than not, the even trading days, which is one of those that we had today, where there is this Fed meeting, this fundamental macroeconomy kind of like reading out prints being given, or basically any like presidential talk, elections. Like there's a lot of very very high weight events going on for the calendar year, for the financial markets, and every time that Fed chairman speaks, this is considered an important trading day, event trading day. And event trading day brings a lot of noise, right? You get a lot of chop. And if you see the 5-minute chart or the 1-minute chart, you're going to be basically like give it a 5-minute, right? You're going to see how much of this, difficult conditions was really giving for the situation, right? You were looking at the breakout, which eventually did not hold through. Instead, it kind of like slid, right below, and took Bitcoin down south, to 2500s. So arguably, you're looking at some setup that actually is more bearish than bullish, as Bitcoin got rejected. So we have the technical momentum principle working in favor of Bitcoin bears in the short term. Bitcoin had been underperforming the S&P 500 and other markets most heavily over the past 5 days and over the past 5 weeks as well, right? And at the same time, you're looking at this kind of like a pattern, whatever that is, if it is a bearish pennant or a rising wedge. In all honesty, I would call it much more a bearish pennant rather than a rising wedge, which typically happens after an upward trend. So here, having a downward trend prior to it, you would be looking at something that we know a flag or a mast, half mast formation. That is what this bearish pennant is. And then just looking at it, you could argue that the potential base size or the flag size, the mass size, potentially may give you a little bit of a price objective for this potential breakdown. So we've broken down here on this bearish pennant, if you will. So the ideal technical target would be probably somewhere measured from arguably 23,200 down to 27,700, right? So we're looking at basically quite a lot, 2.5k of a potential target to the downside from the breakout level. So taking it potentially even in the region of $19,000, that is where I would argue that the potential price objective could be, right, for this. And if we take it, this brings you about a 12% decline of total. And on average, and in theory, of course, we are not going to get you guys any certainty, any guarantee. We don't have a clue truly what's going to happen tomorrow, right? We don't have a crystal ball. I wish the markets were as simple, but because markets have intrinsic an inherent entropy, chaos, disorder, disbalance, then which changes uncontrollably and unpredictably because of these butterfly effect. When on one side of a planet butterfly flaps its wings, on another side of a planet may come a hurricane out of this. So that is the very case. So getting so much real-time data makes it impossible to predict with any kind of like certainty for what's going to happen today, tomorrow, next week, not even to mention next year, right? So take it with a grain of salt. Of course, this is not Beth Pryor says Congrats, Birb. CMT legend. Thank you so much, Beth. Thank you so much. God bless. James says, by the way, James Stacy says DXY target 115, in my opinion, possibly higher. Well, arguably, if you're looking at the dollar, right, the target becomes somewhere around 120, right? This is a range pattern swinging back and forth between support and resistance. Arguably, the base size, is anywhere between 16 and 17 points, basis points here. So looking just bad at the breakout level, this gives you a potential price objective based on a measured rule movement projected, where a lot of eyes would look probably somewhere around 120. However, take it as well with a grain of salt, because eventually, we may not necessarily be projecting so much into the future. We don't know what's going to happen in the next couple of years. That's what I was saying. We're talking about the 7-year long pattern. I'm not going to give you guys any estimates for what's going to happen in 7 years. Perhaps, there is going to be some war or whatever. So all those things concerned, taking Bitcoin in here, I would argue that we are truly, truly looking at a very dangerous situation for Bitcoin, where all the odds that you could get for Bitcoin are basically against it. I'm not an ultra bear. I'm not an ultra bull. I'm not giving predictions anymore. In all honesty, I've stopped doing that. Truly, from my understanding and getting engaged within the CMT certification, I truly understand that projections and predictions are maybe done for fun, but definitely not for making money. Overall, how many times in your life can you guess and be right in a row, right? You may win a lottery once, but how can you guess what's going to happen 100 times in a row? And why would you rely with your money on it? So stop doing these predictions. So I'm not going to give you guys any targets. I'm not going to I'm not going to tell you what's going to happen tomorrow. I have no idea about that. However, if I were to give you any estimates, then I would argue that Bitcoin basically breaking and failing to break and hold this major breakout, right? We had a number of kind of like head shaving on top, where we would climb higher, but this new trend would bring resistance, which would break and fail, and new resistance then would be broken and fail again, right? And it would climb like that many, many times, eventually committing to this kind of like a slowly upsloping trend. Movement. I would not necessarily call it a trend on a Dow theory basis, but Elliott wave practitioners, Dow theory classifies that as a trend because it is an ascending sequence of higher highs and higher lows. However, Elliott wave practitioners would not necessarily refer to it as a trend, because it definitely lacks this space between the next highs and lows, right? Only if you get this enough space and demand building, driving the prices higher, building this anticipation of the lows, where the loss aversion kicks in, where the regret bias kicks in for basically having missed on the prior entries. So unless you really get that, you cannot really talk about some specific trends. You are here rather looking at a corrective movement, which got invalidated on its upwards thesis, with the breakdown following this rising wedge pattern. And on top, we are having this bearish pennant, which had just got rejected as well. So which have just got rejected. And I would argue that even if it didn't get rejected, we would still be very cautious on Bitcoin, mainly because, again, of this non-trending environment. This is lots of corrective movements, lots of chop, lots of uncertainty, lots of unpredictability printed in Bitcoin chart. And guys, well, let me scroll through the comments real quick. Before I wrap the show, there are some questions. And by the way, if you're watching that on YouTube, make sure you hit the subscribe button, smash the notifications, hit some comments as well. I really want to see your comments, guys. In all honesty, there are so many bots on Twitter. There are so many bots on Instagram, on YouTube, that are just, it's really pleasant and soothing at times to go and read some comments which are not coming from bots, right? So do as you please. However, feel free to leave your comments, leave your questions, and even after the show, I'll do my best to come back around and actually hit the answers to at least some of them. Probably when there are too many, I'm not going to be able to cover all of these, but that's where I got my beautiful 24/7 team international experts as well, who are all getting in the process of certifying them skills. In all honesty, is the nest we have existed since 2017. This is over 5 years of already validated action and validated story for so many traders who actually came in and changed their trading for much better, got this confidence back. They're back on their feet after suffering from lots of losses. So I know the trading is not easy. I've been there, done that, lost money so many times. I've been wrong so many times, and probably infinite amount of times to come for me as well. However, the most important point is being profitable. You can really keep getting profitable trades as long as you have a system. It's not going to be giving you 100% win rate. In fact, I myself, as a trend follower, I agree willingly and do consent to have 30% win rate, which means that I am right only about 3 out of 10 times. I'm right only about 30% of the time, and I'm wrong 70% of the time. But when I'm wrong and I keep my losses short, then I wait for a larger trend to develop, for so-called fat tail. And when it finally develops, it truly gives this power to cover all the losses and make up for a very good profit. And that is the very beauty of trend following, which is confirmed even scientifically and academically to be the most and the best performing asset, the most reliable for its robustness as well eventually. So yeah, Mike says, congrats, my friend. Thank you so much, Mike. Jason, you have congratulations from Gemma as well for true. So many comments here. But Roger's saying more downside for BTC if DXY retraces, Bitcoin will have like a potentially, although there are no rock solid kind of like rules for the markets work, right? There is nobody wrote the rules for the market that if the DXY goes down or Bitcoin goes up forever or stuff like this. Yeah, in all honesty, guys, I really hope and I really wish that I could answer all of your questions. However, if I were to give my final look and taste on what Bitcoin potentially may get, then I would be really cautious about this weekend. Of course, I'm personally, after getting stopped out on my long position somewhere in the it was 23,165. That was my invalidation level. Hang on, that was it. That was here, 23,165. I talk about it on the last webinars as well, so feel free to go and look it up. It's all there. Ever since I remained cashed on my trend strategy out there. So aside, of course, I'm not all in crypto. I consider just one of an asset class next to other asset classes that I invest in and that I have. So I would never risk getting all in Bitcoin. Here, truly, you're looking at a potential target, like I said, of around $19,000. Will it get there? I have no idea. But all I know is that when we have failed patterns, when there is a failed pattern, failed breakout that really breaks to new highs, but it fails to hold it, typically and more often than not, it tends to go stronger and perform better in the opposite direction than anticipated. An upwards breakout that fails tends to perform better in the downside direction. That is why I would argue that Bitcoin has all the odds skewed against the bearish or versus or positively for bearish chances, and at the same time against the bulls. It doesn't mean there cannot be any miracles kind of like event or price shock that some big ultra billionaire just appears all of a sudden and drops a note and info that he's the Satoshi Nakamoto and that he's the president of some country and they're going to revolutionize the entire world or something like this. You don't know that. Same way you cannot expect what's going to happen tomorrow with 100% certainty. So you have to be open for anything. You have to be ready, and that is all about risk management. Technical analysis is not there to give you future. It's about to give you the tools to manage your risk. That is it. And I, guys, really wish you stay safe out there. But if you want to learn more, I really invite you guys to join in on 7 days trial, 7 days free in the Birb Nest for our trading community since 2017. Sign up free, upper right corner. Go for it. Hit in the button. Get your email, get your name, put in the brackets, and we're going to contact you in a 7 days free trial offer for yourself. No payments, no credit cards required. But if you want to come learn and get everything that you cannot get outside of our community, which is the international support from myself, from my team to get you guys helped, that you deserve, that you need at the very specific time with all your questions, any questions you may have, get you guys all the tools that you have to get back on the feet and make up for losses. Well, that's it. That's there. It's hanging up there on the website, 7 days free. Welcome you guys there also with your questions. I hope you guys enjoyed the stream. Hit the like again. Thank you so much for tuning in, and I hope to see you guys on the next spaces, on the next Thursday, and on the same time on the next streams. Stay tuned with our YouTube for the next content pieces. Guys, God bless you all, and I see you around the next shows. Bye-bye.